Welcome to Modern Mindset, the show that picks the brains of the world's leading minds to help you unlock yours. Decoding the beliefs and strategies of global experts to give you an updated mindset to make the most of modern life. Hosted by the UK's most in-demand and highest-paid hypnotherapist, Adam Cox.
Hi, this is Modern Mindset, the show that picks the brains of the world's leading minds to help you unlock yours. I'm your host, Adam Cox, and joining me today we have financial empowerist Jessica Hernandez. Welcome to the show.
Thanks for having me, Adam.
Great to have you on there. So there's two things I love talking about, money and mindset, and you've kind of got this kind of fusion of both. Where did that interest originally spark for you? Where did it all come from?
I feel like money is always something that intrigues people from a young age, but from when I actually started getting into it and making an effort to have that be something that I wanted to strive for, I would say I was in my mid-20s and I attended a seminar that was originally created by T. Harv Eker. And it was a seminar called the Millionaire Mindset. And so that's when I was first introduced to just the idea that money was something very achievable, but your mindset had a lot to do with, achieving those goals.
I mean, it's such a huge thing. I've seen T. Harv Eker's program, and one of the things that I think a lot of people don't really understand is the consequence of a belief, and that could be a childhood belief that seems innocuous, seems harmless. You have to be ruthless to be rich. But the consequence, the ripple effect of just a single belief can actually sabotage financial success hugely. What did you learn about your own beliefs that you thought maybe, if I don't change these, this could cause a real problem?
I still have those worksheets and I could literally go back and see where my mindset used to be. I don't have that offhand, but I'm guessing a lot of it I probably thought was just attributed to luck, being born into the right family, in the right community, having other people in my family there to show me, but I didn't have that. So I a lot of people aren't lucky enough to have that environment. So I knew it was up to me to figure out how to achieve that. And so going to that seminar was one step that I made for myself in order to help my.
I think luck is such a entrenched cultural belief system. And I think things like the lotteries and stories of a lot of the rich and famous, it's an actor that got their lucky break and then suddenly they're getting 10 million a movie and all this kind of stuff. It does propagate the idea that some people just get lucky, and that's the fundamental reason why they're successful. And there's lots of evidence to fuel that belief that luck is a good reason why people are very financially successful. Why do you think it's a disempowering belief that luck is a crucial factor to financial wealth?
It's completely disempowering because you're constantly waiting on something external to give you approval or to deliver something to you. And it doesn't take into account the value that you have created for yourself and the work that you have done in preparation for that opportunity.
Yeah, the locus of control is external, isn't it? You're kind of, the only thing you can really do is buy more lottery tickets or kind of cross your fingers and hope that something positive happens. Do you think that the law of attraction and things like vision boards have also influenced this idea that, you need to be lucky to be rich. So therefore, just manifesting things or wanting things, that's also disempowering, would you say? Or is that actually quite useful?
I would say it's a component that people can use, but it's not the end all be all. You can't just have a vision board and sit in your house waiting for them to magically appear. Yes, you can do that. You can have that visualization there to remind you of what you are aiming towards to keep you on track. But if you aren't consistently doing something in order to get closer there, then, the idea that it's just going to manifest, I don't completely believe in that. There is work involved in order to having it happen.
I agree with that. I think there's too many people trying to vibrate at the right frequency rather than just kind of implement an action plan. When you started thinking about, different strategies that for you personally to be financially successful, there's lots of books about how property can increase financial wealth, or how the stock market can do it, or building a business. What were the kind of asset classes that attracted your attention?
Well, one of the things at the seminar was exactly that. There are basically three ways to wealth: real estate, owning a business, or the stock market. And for me, when I was in my mid 20s, having those three options, I mean, I was in my mid 20s, I had no business ideas or experience. So that was out. Real estate, it just seems very time consuming. You have to work with a lot of people. You have to drive to a lot of places, speak to the brokers, like possibly like, realtors, mortgage, the bank, like just go to different locations. So it just seemed very time consuming. And for me, as an introvert, being in my mid 20s, like learning how to trade in the stock market, I could do that from my house, do that from anywhere in the world. And it just seemed to fit my lifestyle and what I wanted to create the most, because I love traveling. And that's something that I get to do when I travel. If it's my trade day, I can literally do it from anywhere in the world. And it doesn't affect like real estate and like business. Like now that I own a business, I am, because it is my first year in business, so I am more time involved in my business. I'm not necessarily an owner yet. So the stock market was definitely my first, it's what drew me in first out of those options.
Yeah. What drew me into the stock market, and it was the UK stock market originally, but it was a story about compounding. And it was this idea that if you invested like a few £100 a month from when you were 20 and then stopped at 30, someone starting at 30 would have to put the same amount in for their entire life and never catch up with a person that just did it for 10 years. And that kind of blew my mind. So I had that kind of strange metaphor of like just this huge power of the snowball effect very early on. But it is a game, would you say, that kind of rewards people to learn when they're young, or can people learn this at any age?
I mean, you can learn it at any age. Unfortunately, I feel like, the older you get, the more motivated people tend to be, because they are trying to make up for lost time. So, getting somebody young into the stock market, it seems to be challenging. Like I am an anomaly in that sense. I started trading and learning about it when I was 26, I believe. And yeah, it's not common, but I feel like it has become more mainstream recently in this past year.
One of the barriers that I think a lot of people, and again, I think it's a belief system rather than reality, but there is this perception that you need to have already a sum of money to invest in the stock market, whereas with things like businesses, you can, have a great idea, have relatively low startup capital, and then kind of build something. With property, you can use a mortgage to leverage other people's money. Whereas the stock market, you're kind of risking your own money, and not everyone has that money. What would be your kind of take on this kind of belief that to be playing the game of the stock market, you already need something to invest to begin with?
I highly disagree with that. I mean, for me, it seemed like the stock market was the lowest entry point to get in out of those three options. I mean, my first trade, I think I had $2,000 and that was it. And, my initial trade was, I think, a 2% return. I had $40 of profit up front. So, and I don't believe that $2,000 is a lot of money to necessarily start with. I believe even if at the very bare minimum, like $20 a week, like that's what, $80 a month, it's completely doable. It's just most people just aren't in the habit of saving, and they don't put that as a priority. I feel like everybody should pay themselves first before they choose to buy whatever it is they want, in order to develop a habit that will later compound, like you said, and then give them the ability to start trading.
I think part of the reason for it is that people look at investing as almost like a binary game, that they have to kind of invest everything or nothing. Whereas what you intuitively knew in your mid-20s is that you've got to learn how to play the game, and therefore, starting small, okay, yeah, you're not going to make huge amounts. The percentage gains on a small amount are going to be still small amounts, but you're learning how to play the game. What were those key lessons that you learned in those early days that kind of shaped your trading strategy?
Patience and consistency. So, just not being discouraged by the number, just the overall long-term, the long-term game. And, being able to calculate, if I stay at this rate over time, compounding, what will that look like? And just being motivated to continue it. Just the biggest lessons is, just not trying to get rich that year. A lot of people want to jump in and see the returns and live off of their profits within a year. And it's really not reasonable, especially if you're starting with a small account. I would rather play the long game and just consistently have these small returns every month rather than, gambling and making these risky trades with the potential to get lucky. I just prefer to remain consistent and stable.
And I think some people have the metaphor that playing the stock market is a bit like playing in a casino. And therefore, when they've had like a couple of runs where maybe they've lost a bit, there is that tendency sometimes to kind of like, right, I'm going all in, to kind of chase losses. Yeah. Do you see that in particularly with beginner traders, that there is that kind of gambler's mentality that they need a different way of actually looking at investing?
Yeah. Beginners, they don't have a strategy. Or they're jumping from strategy to strategy. So they're very inconsistent. So they don't allow whatever they're doing to give them results. It's funny because the way that I trade stock options, but there are two sides to it. You can be a buyer of options or a seller of options. And that's the metaphor that I use, is that the buyers are the people at the casino playing, betting, trying to make these large gains, whereas I'm a seller of options and I'm consistently earning a profit. I'm the house. So I'm taking the bets and I'm consistently getting paid every month to do so.
That makes sense. And one of the more controversial elements of any kind of trading is the idea of leverage. So, whether that's kind of spread betting or kind of, puts and calls and things like that. What would your take on that be? Is that just a more efficient way to get a high return quickly, or is that potentially exposing people to kind of lose everything before they've figured out what's going on?
If you're the buyer side, then yeah, you can lose everything very quickly. People who buy puts and calls, if most of the time they are not educated enough to really know what they're doing, they're just making guesses. And so because of that, yeah, they might have a good gain one day. They don't really know why they had that win. So they just try to duplicate it, but they just don't really know what they're doing. And by the time, usually people are going to empty their accounts before they actually are in long enough to really learn what they're doing and how to keep it consistently winning.
But again, sometimes people will hear those like huge returns of, 10, 20, 30 times the initial investment. We saw recently with the GameStop, the dangers of people looking for, shorting the market and things like that. But equally, we saw people, part of the Robinhood community kind of making incredible gains, like insane gains. Is that something that you actively look at as well, and you think, okay, right, there are these kind of windows of opportunity that only come around in short, kind of bursts, and you're all over them? Or are you a bit more cautious when you see these kind of just anomalies that kind of break all the rules?
For something like that, you have to be in right away. Timing is crucial, because if you wait until it's in the news and then you try to get in, that's when all the people who got in early are selling, now that all the amateurs are getting in, and now the older, the wiser traders are getting out, and that's how the common people lose their money.
Highly risk. One of the, I would say, new asset classes that have got a lot of people excited recently are the crypto coins, the altcoins. When people are seeing, double digit returns over a single day, that generates a lot of excitement. Is that something that you invest in, or is that something that you think, well, hold on, this is again highly risky compared to other asset classes?
It is highly risky. And because of that, I don't trade a lot in there, but I do have money in a couple different coins. I think I got into Bitcoin probably in 2018, right before they had that first big run up to like 20K. I think I got in around 8K before that started. So I've been in it for a couple of years, but it's not something that I put my whole portfolio in because of the volatility, because, one piece of bad news can just cause everything to crash. But the money that I invest in anyways is never money that I need. So even if that was to happen, I wouldn't be concerned and I wouldn't get emotional about it, because overall, I think it is a long-term play.
Yeah, I agree. I think it's one of those things that when people, again, have that gambling mentality, that tends to prompt the very behavior that ensures losses. So they get in after it's already gone on a big run. So they're kind of buying at the top of the market, and then they panic when it starts going down, and then they kind of sell and crystallize losses. What kind of trading psychology patterns have you seen? And for the person considering, oh, okay, I'll make lots of money in the stock market, what are the key things for you to make people be aware of, would you say, the pitfalls, the mistakes?
For some people, some people just need to act opposite of what they're feeling.
Mm.
So what I mean by that is, if they see a run going and they see it going up and up, and if they start feeling a lot of anxiety about missing out, chances are they already have, and that is not the time to put the money in. And then on the other hand, if they've gotten in and they are on that high of like the money is going up and up, and they don't want to take, well, it depends on the strategy. So, I mean, if they're just short-term investors and they just want like profits quickly, some people get the greed taking over them and they don't take profits because they just believe it's going to keep going up for no other reason than that's just what's been happening. But markets are always cyclical. They're always going to go up and down. There's never just going to be a solid straight up line.
Yeah, absolutely. You mentioned the two words there, fear and greed. Would you say they're the cornerstones of kind of trading psychology and kind of group psychology?
Yeah, absolutely. Especially for beginners and people that don't have a strategy. They just operate based on their emotions, and that's a terrible strategy.
And meanwhile, there's people like you that know what's going on and take advantage of that kind of group psychology, bouncing around by fear and greed, and kind of pick the wins in between. In terms of the future, if you're kind of looking at, there are a lot of people, let's say, financially struggling as a direct result of the pandemic, worried about their source of employment, a lot has changed in terms of reliable income streams. Would you say that investing is a viable route for everyone, or does it need a particular mentality before you even enter that kind of game?
The mentality needed for an investor is a long-term mindset. I mean, that's critical. It's not the gambling mindset where if they have the idea that they're going to come in and just as a beginner, just all of a sudden become rich. It's just not the way it happens. So I feel like that's the first thing, just to have that long-term mindset to become an investor. Because if you don't have that, chances are it's just you're going to make mistakes, and yeah, it's just going to bite you later.
So if someone is one of those kind of instant gratification type of people, as a child, they spent their pocket money the moment they had it, maybe investing isn't for them.
I mean, I feel like investing is for everyone, but maybe they shouldn't be in charge of it.
Maybe find someone, a good fund manager to utilize. What would you say is the thing that you wish you would have known perhaps 10 years ago? So not necessarily a particular stock going up, but a principle or concept that you kind of know very well now, but didn't know in the past, that you wish you had that time machine. You could have that chat with you 10 years ago and say, really understand this principle, and that's going to put you in good stead.
when it comes to money and investing, the biggest one is just how compounding works. Like what you said in the beginning, it's just when you really understand it, it almost doesn't seem possible. Like, how does that make sense where, you can invest $1,000 and, 12% return, 20 years, like just looking at that and even comparing it to just adding like a small amount every month and just the dramatic change, because you would think like it's very common for, if you compare like 12% return per year versus 24%, you would think, okay, well, 20 years from now, it's just going to be double what the 12% would be. And it's not, it's like a factor of like 9 or something even greater. It's so just really understanding how compounding works and knowing that, like, I truly believe anyone can become rich. It's just a matter of time and consistency. It doesn't matter if you're only starting with like $1,000. It's just having that faith and knowing how money works and just giving it the time to do its thing.
Mm. Yeah, compounding's such a powerful principle, but it's a double-edged sword, isn't it? Because a lot of people that take on consumer debt, even if they don't understand how compounding works, it's working against them. That kind of 15, 20% interest on their credit card is effectively eroding their very potential to do this kind of investing, because it's kind of eating away at their equity. What was the key element for you that helps you understand how debt could work for you rather than against you, and how compounding worked? Was it a story? Was it an experience? What was the key thing that you thought, oh yeah, it just makes absolute sense now?
Well, I've never like taken on debt in order to use that towards compounding. And I mean, I think it was just having that negative example of my mom constantly living like paycheck to paycheck and being in debt, that I just knew that that's not what I wanted to do. So I was always pretty good with my money in that way, where, if I have a credit card, I make sure I pay it off every month. Like I never got lost in that debt cycle where, unfortunately people do, they max out their cards and then they're just stuck paying the minimum, and, eventually they're paying twice as much as what they ended up purchasing the item for, is most likely.
Mm. And quite often that asset is pretty much worthless, before they've even paid off the debt, and they've got the consequence of that. In the UK, the Bank of England have been printing money, through quantitative easing, the Fed exactly the same. What's your take in terms of how the consequence of just, that response to the pandemic, in terms of so much increase in the money supply? Do you just see, well, that has to have a consequence on inflation, and therefore the value of assets just has to go up? Or do you think that this is fueling a bubble and it has to correct? What's your take on the consequence for what's happening here?
I mean, exactly that. I think one of the motivations I think the government had to, have that quantitative easing is, I mean, the US is basically owned by China. We have a massive amount of debt in our country. So, making the value of our dollar weaker is good for that, not good for the people. And we have definitely been in an overpriced market, I believe. And I do think we are way overdue for correction. We had the crash last March, but it wasn't a true crash. The reason why it bounced back so quickly was because of the government assistance. So I do believe it's just a matter of time until we actually experience a real crash. But no president wants to have that happen under their watch. And that's why they do whatever they can just to kick it down the road. And, eventually the bubble is going to pop. But what that looks like, I have no idea.
Yeah, I mean, it's not unusual for 50% drops in the market. Can you see that level of a drop in, let's say, the S&P 500? Do you think it could be that big a drop, or do you think it could be closer to what it was in March last year, where it was kind of like 20-30%?
I mean, who's to say? It's going to just depend. The vast majority of, who's invested in the market right now, I think are like, people in their, the people in their 50s and older, and they're going to want to pull out. So it just depends how much fear comes around to, what percent of the people want to just pull it out and guarantee a loss. And yeah, when a real crash happens, yeah, I mean, it could be definitely worse than what it was for COVID, I think, but we shall see.
Indeed, like nobody's got the crystal ball, have they? But I think you're right. There will be, a fairly major correction. There are big players on the sidelines that are collecting cash right now to take advantage of some kind of correction. Buffett and lots of others that are almost kind of it for them. It has to happen, and when it does happen, there'll be bargains to be had. Is that how you look at trading as well, to kind of look, that's the January sale shopping time, that's the Black Friday when you can get some real bargains there in a correction?
Absolutely. Absolutely. That's kind of like why my business started. The market crashed and I actually made 20% that month while everybody else was losing 20-30%. And I just kind of haphazardly just asked my Facebook friends and followers if anybody wanted to learn, see what I was doing. And then it just grew from there, because that is the opportunity to make the most amount of money. And especially once, they said that the government was going to assist, it was the easiest time to trade after the crash. And it came up so quickly. And like, for my method, the premiums, the amount that I was getting paid to make these trades was just ridiculous. And, it's something that doesn't happen often. It's going to happen once every 10 years or so. I'm sure that the crash is going to happen before then for this time, but that is the opportunity where you can make the most amount of money in the shortest amount of time, but you have to be prepared and know what to do in that situation.
Yeah. And most people to prepare would say, have a bit of a contingency so that you can be in a financial position to buy these opportunities, but also a hedge. What's your hedge against a falling market?
I mean, I don't know if I have one necessarily. I mean, like I said, I don't depend on the money that's in the market. So it's not like if the worst case scenario was to happen where my portfolio dropped 50%, like I wouldn't panic. Like I have cash in savings too, as well, to dump in the market if that was to happen. I'm self-employed. Now that I have this business, like there's that as well. So for me, I don't feel that a crash is going to greatly impact my life directly. It's just going to be something that I'm going to be able to navigate using the skills that I know with trading.
It sounds like your hedge is a diversified income stream. So, if kind of 100% of all of your income and assets were all tied up in the market and that falls 50%, then that could obviously impede. But given that it isn't, you've got multiple income streams, you can take advantage of that, the kind of the dips. In terms of people wanting to learn more about this, obviously you figured out for yourself, have people working with you to kind of effectively learn how to avoid the pitfalls. What if someone was working with you, what's the key principles they can expect to learn, and how is it best for them to get in contact with you?
The key principles, I start off by teaching them how to evaluate stock, what makes a company good. The biggest risk is owning shares in a company that goes bankrupt, because then that's guaranteed loss. So just knowing how to price a company, how much is it worth versus how much is it actually selling for, being able to see that difference when you can compare, like, okay, this stock is selling for 100, but it's actually only worth 50. So if a crash was to happen and it drops to 50, that's actually fair price. Just learning about like the rule of 72, being able to predict where your money could be depending on the certain returns that you're getting every month. So it's a very broad strategy. I really teach my clients to look at the market and trading from all different angles, not just to strictly like reading the charts, because some people trade strictly just by looking at the charts and they have no comprehension or care to learn about like macroeconomics or like how the economy is affecting the market. And I just really want to make sure that the people that I take on they learn it from every angle, so they feel even more confident in their trade, and that can remove the emotions from it. So for people who want to learn more, you can go to my website, stockoptionslifestyle.com. And I have like a training webinar on like a little bit of what I do. I have a sales page on there if you just want like my digital program only and you just want to run through it. But yeah, it's been a really interesting year. I haven't even been in business for a full year, like with my LLC, but I've been coaching for over a year now, and just the impact and like changing people's perspectives and confidence in themselves has been a really rewarding journey.
I can see it on your face. And what would you say is the key thing that you see changing for them? Is it that kind of realization that they don't have to rely on luck anymore, and they don't have to have that kind of fear of scarcity? What's the key thing that you see after that light bulb switches on that creates that change?
It's funny. I get this from a lot of clients. They just say like, why don't more people know about this? And it's just that's exactly right. Like, why don't more people know about this? And it's just something that wasn't taught to us. And so having that confidence, that clarity, just the knowing, the feeling secure that it will happen, financial abundance, financial success, growing your portfolio, it will happen. It's just a matter of time. And so just having that sense of security instead of like a dark, cloudy future where you don't know what's going to happen, being able to take your money into your own hands and giving yourself that empowerment is just incredible.
I agree with you. I think you're doing a great thing. And I think more people need to know that it's possible to not rely on luck and create your own financial destiny. I think the battle that a lot of us face, though, is that there is a huge level of cynicism and pessimism, and they think that everything's a scam. They think that because so many people are faking things online, that actually, any results or numbers aren't real and that kind of stuff. So, what would you recommend for people that, are really curious to learn more about this kind of stuff? What can they do to avoid the sharks, the fraudsters, the shysters out there that are trying to take advantage of people of that eagerness to kind of get rich quick?
I mean, it's difficult. It's something that, I experience. People doubt my credibility or my skills. And it's totally understandable. But I feel like one of the things I feel like is kind of like you get what you pay for. So there's a lot of there's like certain like Forex companies out there where you're charged like a monthly membership fee and it's very low. So it's very tempting for people who are trying to get in and not spend a lot of money. But I feel like, you get what you pay for. If you're paying $50 a month, like chances are it's a company that has like thousands of people, and how much direct support are you actually getting from them? Probably nothing at all. A lot of the training is if it's just video content only. Personally, I don't believe that is enough to be really successful. I think, especially for something like trading in the stock market, having somebody there to watch what you're doing and to give you tips and like things to look at is so critical. I like to compare it to if you were to want to become a pilot, would you want to learn just by watching a series of trainings and videos and just getting in a plane and doing it yourself? Probably not. You would probably want someone to really be there next to you to guide you, because, just like flying a plane, it can be extremely risky. Like your financial life can depend on it and you can lose everything if you don't do it right. So
yeah, have that kind of mentorship and guidance from people that already knows how to fly the plane, I think is an important thing. And there's a lot of people that I don't think know how to fly the plane, but they're teaching other people to fly the plane, and that's a recipe for lots of crashes. Give us your website address again. So if people do want to work with you, what's the best way they can contact you?
Yes, it's www.stockoptionslifestyle.com. Currently, I'm not taking anybody that isn't a US resident, and that's only because the international platforms that we've found, they're very technical. They're not as user-friendly as what I have access to in the US. And then I do take some Canadians as well, but there are certain restrictions on their accounts just based on like the government regulations over there. So for anybody who's not a US resident, I would need to like speak to you directly and just go over like how it would be different going through the program. Because it's just going to be different.
Yeah, different markets, different rules, that kind of stuff.
Yeah.
Jessica Hernandez, Financial Empowerers, thank you so much for joining me on the show today.
Thanks, Adam. I appreciate it.
And to you at home, thanks for joining me on Modern Mindset. See you again soon for more.
Thank you for listening to Modern Mindset with Adam Cox. To automatically receive the latest episodes, please subscribe. If you'd like to support the show, please share this episode with just one friend you think it could help. And if this episode helped you, please leave us a 5-star review. Modern Mindset, picking the brains of the world's leading minds to help you unlock yours.